You know, when you look at the markets right now, it feels like you're just getting flooded with crazy headlines, right? It's really easy to get lost in all that static. So today, we're going to cut right through it and find out what's really going on. Let's get into it.
I mean, seriously, it feels like every single day there's another bombshell, doesn't it? The head of the Fed is under investigation by a grand jury. And at the exact same time, the government is just throwing out all these new economic policies that seem kind of chaotic. It's enough to make any investor pretty nervous. So here's the big question we all have. Is all this stuff, is it signaling a real fundamental change for the market?
Well, that's exactly what we're going to figure out right now. In this explainer, we're going to peel back those dramatic headlines, all that noise, and look at the hard data that actually matters. You know, the signal. All right, let's dive in.
Okay, first up, let's talk about this flood of new economic policies. I mean, on the surface, it looks like a ton is happening all at once, almost completely at random, but when you look just a little bit closer, you start to see a very, very clear pattern.
So check out these 4 major moves we've seen lately. They're capping those high-interest credit cards. They're pumping a huge amount of liquidity into the mortgage market. They're putting new penalties on big investment funds that are scooping up family homes. And get this, they're even talking about a tax break on Bitcoin sales. What do all these have in common? Every single one is aimed right at the average person's wallet.
And when I say huge, I mean the scale here is just immense. Just one of those policies involves these government-backed groups buying back $200 billion worth of mortgage bonds. That is a massive direct injection of cash into the system, and it's specifically designed to do one thing: keep the money flowing and make lending easy.
So you got to ask, what's really going on here? Well, the timing is everything. With midterm elections just around the corner, these are just textbook moves, right? They're designed to win over voters and calm people's anxieties about the economy. It's all about creating this feeling of stability and prosperity, at least for the short term.
All right, now let's switch gears to that other huge headline: the investigation into the Federal Reserve chair. I mean, this sounds like exactly the kind of news that should send the markets into an absolute nosedive. But did it?
Okay, let's just stick to the facts here. A bunch of Fed employees received notifications to appear before a grand jury. And yeah, this could potentially lead to criminal charges against the chair himself. Now here's where it gets really interesting. It's all about who knew what and when. While you and I found out about this last Friday, the big institutional investors, the so-called smart money, they already knew. And trust me, if this were a real crisis, they would have been selling way before we ever heard a peep about it.
And that right there, that's the central paradox. A headline this explosive should have rocked the market to its core, but it didn't. So why not? Well, the answer isn't in the news articles, it's on the calendar.
Just take a look at the actual timeline of events. The chair's term, it ends in mid-2026. This whole complex legal process, though, it's not expected to reach a verdict until 2028 at the absolute earliest. So think about that. By the time there's any kind of resolution, he'll be long gone from his job as chair.
And listen, this isn't just a wild guess. We can look at prediction markets, which, by the way, have a shockingly good track record on these things. They are giving it only an 11% chance that this whole thing gets wrapped up before his term as chair is even over. The market understands this. It's already done the math.
And that right there is the key takeaway. For anyone investing today, this investigation is just long-term political drama. It is not an immediate risk to the market. Its impact on current policy, it's basically zero.
Okay, so if the headlines about populist policies and Fed investigations are just noise, then what is the real data telling us? Let's forget the talking heads for a minute. Let's look at the charts and find the actual signal.
All right, let's start with the classic safe haven asset, gold. If there were true widespread panic, you'd expect to see a massive rush into gold, right?
And yeah, gold has been strong. It's rallied up to a really key resistance zone. But you have to look at who's doing the buying. It's not a bunch of panicked individuals. The big players here are central banks. For example, Poland was the largest central bank buyer in the last couple of months. See, this is a story about institutional strategy, not widespread fear.
Okay, so that's gold. What about the broader market? How did the S&P 500 react to all this supposedly terrifying news?
Well, it barely blinked. We saw a tiny dip, less than 1%. And look, after the incredibly strong rally we've had since the start of the year, this is just a normal, healthy pullback. It found support right where you'd expect it to. This isn't a crash, folks. This is just the market taking a quick breath.
But if you want the real unfiltered truth about the economy's health, you have to look at the bond market. I mean, there's a reason they often call it the smartest room in the building.
Think about it. If the market were genuinely freaking out about instability or runaway inflation from all this new government spending, what would happen? U.S. bond yields would be spiking higher. But instead, they're just holding steady, right around 4.2%. The bond market is essentially yawning at all this and saying, yeah, nothing to see here, move along.
And now for the ultimate confirmation. This is one of the oldest and most reliable signs of a healthy bull market out there. It's called Dow Theory. And the idea is simple. For a trend to be real, the companies that make stuff, the industrials, and the companies that ship that stuff, the transports, they have to be moving up together. And what's happening right now? They are both hitting new highs in perfect sync. That is an incredibly powerful confirmation signal. So, okay, we've cut through all the sensational headlines, we've dug into the hard data. What's the final verdict?
Let's pull it all together. When you really tune out all that daily noise, what is the one clear signal the market is sending us right now?
Okay, here's the bottom line. Those pre-election moves by the government, they're actually adding cash and confidence to the system, not taking it away. That whole Fed investigation, it's a non-event for today's market because the timeline just doesn't matter for right now. And maybe most importantly, all the key indicators, from bonds to stocks to transports, they all confirm that the underlying bullish trend is very much alive and well. The signal couldn't be clearer. Focus on the data. Focus on the trend, not the temporary turmoil.
And that really leaves us with a powerful conclusion, doesn't it? When you step back and you look at the whole picture, that daily flood of alarming headlines, it just doesn't match the reality of the data. So the next time you see one of those sensational headlines pop up, just ask yourself one simple question. Is this signal or is it just noise?